Good morning. Before we begin, I would like to acknowledge that we meet and we learn from each other today on country. I'm coming to you from Gadigal land, where I live, work and write, and I pay my sincere respects to elders past, present and emerging, and I extend that respect to all Aboriginal and Torres Strait Islander peoples who are with us here today. Good morning. My name is Rachel Franks. I'm the Coordinator of Scholarship here at the State Library of New South Wales, and it is terrific to have your company today for this, the last Scholar Talk for our 2021 season. Today, it's a great treat to have Ben Huf with us. Ben is a Melbourne-based scholar and he's done some absolutely amazing work despite lockdowns and travel restrictions and all sorts of other complications throughout the pandemic over the last 2 years to complete his Hertzberg Fellowship. Ben is the second Hertzberg Fellow, and the library is very grateful to the Hertzberg family and indeed all of the generous sponsors who give funds to the State Library of New South Wales Foundation that actually brings people into the library to do projects that we could never have imagined being able to do ourselves. Ben is going to be presenting on colonial liquidity and money in early New South Wales. If you have any questions of Ben or about early colonial finances, please use the chat feature on Zoom and we'll be back after the presentation to quiz Ben. Thanks so much, Ben.
Thank you, Rachel, for that introduction. Thanks, as I was saying, thank you, Rachel. And I would like to begin too by acknowledging the traditional owners of the lands of the people from which I'm speaking today, the Bunurong people of the Kulin Nation, and pay my respects to elders past, present and emerging. I'd also very much like to thank the State Library of New South Wales for this opportunity to speak today, to thank Rachel, who does an amazing job marshalling the fellows, and for the very generous fellowship provided by the Hertzberg family. My project over the last little while has been focusing on the William Dixon numismatic collection at the State Library. I've been following the money through the archives, so to speak. And as Rachel indicated, I must admit over the past couple of years, events have meant it hasn't quite been the research experience that I intended, living in a different city from the archive that I've been working on. And that's made me both very reliant, but also enormously appreciative of the digitisation work that the State Library has invested in over the past decade. My research over the past couple of years with the library would have not been possible without it. And it's been my good fortune to speak to members of the teams that worked on digitising Dixon's money collection and learn a bit about the essential work that goes into preserving our past. So I'd like to thank them again and the library. So I want to begin with the story of this note and the man who issued it, a guy called Stephen Coxon. Stephen Coxon and his brother Charles were first-generation settlers who occupied land in the Hunter region at a place known as Urundi, which we can see written across the top of the note there as the agricultural establishment of Urundi. Stephen's claim to fame today is that he was the sister of Elizabeth Coxon, who married John Gould, many of you will know, the ornithologist and illustrator of the famous Birds of Australia, some of which was done at Coxon's Urundi. But in the 1840s, Urundi was one of the largest sheep stations in New South Wales. At that time, the Australian colonies were also in a severe economic depression, caused largely by excessive speculation in imports. As the colonies' banks looked to protect themselves, they contracted lending and even the best sheep farmers struggled to get lines of credit and pay their bills. Coxon was in this position too, and he looks to have done what many big pastoralists did at this time. He issued his own money. It was likely used to pay a labourer, and given it was payable on the station, it was probably intended to be purchased goods already at Urundi. So it was a kind of internal currency. Not very useful for the labourer in the long run. As the labourer had to eat, they probably accepted note and payment, and so Coxon rolled over his debt. Did it work? Well, Coxon survived the depression, but by 1844, his business at Urundi was now suffering from severe drought. Debts kept accumulating, and he couldn't keep rolling them over. By September 1844, he was back in Sydney. A creditor named Saul Lyons, brother of the notorious auctioneer Samuel Lyons, was pursuing Coxon for his debts. While in Sydney, Coxon had been staying with the publican Philip Cohen, and noticing Coxon's deranged state, Cohen went to the Commissioner of Crown Lands to secure Coxon an allowance from the government while he was staying in Sydney. When he returned to the pub to tell Coxon the good news, Coxon replied to Cohen that he was a minute too late, for he'd already poisoned himself. "That cursed Saul Lyons has killed me," Coxon said. Now, this one might sound a little bit Romeo and Juliet, but I think Stephen Coxon's story points to a more fundamental process which has largely been overlooked in the history of colonial Eastern Australia, which I want to try and unpack a bit today. There's a saying in contemporary monetary economics that a lack of liquidity kills you quick. The phrase was coined to explain what happened in the Great Financial Crisis a decade ago and turn attention to what economists call the survival constraint. That what triggers a financial crisis, whether for an individual or an entire economy, is not levels of wealth, but an ability to pay bills when they fall due, or to find a way of rolling those bills over. It is liquidity problems which become solvency problems, and bankruptcies that follow from there. But this was also something that colonists such as Stephen Coxon also clearly understood well. Those in the early 19th century did not use the term liquidity, but spoke of the credit and confidence, the general willingness to lend and accept each other's IOUs. In good times, credit expanded, but when things turned sour and a few promises were broken, the debts were called in. Those that couldn't honour their promises to pay faced ruin. For Stephen Coxon, poison was better than bankruptcy and a loss of pride. So as I said at the outset, I've been working on William Dixon's numismatic collection at the State Library. This collection includes close to 8,000 coins, notes, tokens and medals, which Dixon bequeathed to the State Library in 1952. It includes examples of Macquarie's Holy Dollars, South Australian gold ingots, and the first coins produced by the Sydney Mint. However, my focus has not been with the coins, but with the paper money in the collection. 878 examples of banknotes, bills of exchange, promissory notes, and private IOUs. In doing so, I followed the great Austrian economist Joseph Schumpeter's advice that to understand money, don't start with coin. And I've read this in two ways. First is the simple fact that paper money was the dominant currency in colonial New South Wales. The shortages of coin in the colonies has often been remarked upon by histories. But in reality, a shortage of coin was not unique to colonial Australia, but a feature of all early modern societies, which, at the lower levels, forced people to conduct their transactions using novel paper instruments, book accounts, and good old-fashioned handshakes and oath pledging. So it was on the colonial frontier. Second, and more fundamental to Schumpeter's point, is that when we focus on coin, we tend to think of money as an object, either as a convenient commodity used to lubricate exchange, or an instrument of state power and its capacity to levy taxes. While money is both of these things, it is also fundamentally about making promises to pay, that is, of issuing credit and making debts, and finding the means of settling those obligations when they fall due. These are the monetary problems that Stephen Coxon faced, as all of us sometimes do. What I want to do today is present a perspective on colonial society and the processes of Australian settler colonialism as involving a struggle for this liquidity, a struggle for the means to pay, as one of the key features of that history. 19th century settler colonialism has always been characterised by its struggles, like convicts, for political institutions, with the environment, or the relations, of course, between First Nations peoples and Europeans. But there was also an everyday elemental struggle that went on that probably cut across all these struggles, especially at the frontier. A struggle for acquiring the means to pay bills in an age when modern banks were both only just emerging and also treated with immense suspicion. This struggle was twofold. It was faced at an everyday level by individuals like Coxon, but it was also an institutional struggle, involving a long conflict in determining who should have control over issuing the best means of payment. Was it individuals, the government, or these new agencies, commercial banks? And how would the credit issued by these different institutions reshape social relationships? Despite the immediacy and importance of making payments in people's everyday life, historians have largely overlooked this facet of colonial history. This is partly because so little has been written on the monetary history of Australia since Sid Butland's pioneering and in many respects unsurpassable 1953 study of the Australian monetary system, a study to which too I cannot begin to repay my debts. Of the few studies that we do have since Butland, they have tended to focus on the very early years when the colony was awash with promissory notes and IOUs, and thereby assuming that with the emergence of modern banking after the 1830s, the world of private notes disappeared, and what became interesting was the world of high finance, Australia's relationship with the City of London, and so on. These things are interesting to me too, but Coxon's story and what I found in the Dixon collection also hints that a diverse range of payment practices continued well into the 19th century. Getting at that means doing some old-fashioned social history in the weeds of the frontier. Much of what I want to talk about today has been gestured at by several historians, and many of the pieces that we'll be looking at are probably well known to numismatic collectors. But making payments has not been given centre stage as a topic of historical inquiry. Doing so, I think, raises new questions about the politics of money in colonial Australia and in capitalist societies more generally, and about the geographical dimensions of Australian settler colonialism. Before proceeding, it's important, I think, to also set this Australian story in a wider context. Liquidity struggles were novel neither to the 19th century nor to New South Wales. The need to find new means of payment had been afflicting Anglo society since the late 17th century, as patterns of consumption and production began to increase and lines of credit became longer and more distant, making the world of oral contracts increasingly untenable. One element I have in mind here then is to suggest that the promissory notes that we find in early Australia are part of the tail end of that early modern plebeian English history. Similarly, new kinds of liquidity struggles were being conducted all around the world during the 19th century, with thousands of micro-unit banks springing up in antebellum America, for example, or enduring forms of peer-to-peer lending in Western Europe. Australian settler colonialism reflected its own variation on this pattern and its own solutions to 19th century liquidity problems. The emergence of big, powerful joint stock banks were one aspect of this, but so was the endurance of a payment system of private IOUs between pastoralists, labourers and shopkeepers that weaved their way into the expansive interior and facilitated European conquest and an indigenous dispossession of the continent. So part of what I'm doing here is thinking of Australia's monetary history as not built up from primitive beginnings to a modern banking system as Butland presented it, but to resituate New South Wales as an episode in a broader pattern and a much longer history of the painful transformations of monetary, credit and debt relations, but one with distinctive Australian dimensions. Okay, so a good place to start, as so often is the case, is with Governor Macquarie. Macquarie's arrival in the colony in 1810. Macquarie famously described the situation he found as one of infantile imbecility, including a monetary system, which was characterised by the kind of notes you have on your screen, which, to quote Macquarie, was a base paper currency, with the lowest and most profligate persons issuing their notes of hand in payment of goods purchased without having the means of redeeming them when due, end quote. Now, this was somewhat of an exaggeration by Macquarie, and it has led historians to describe the early monetary system as an ad hoc temporary makeshift, as Butland said, or as a currency more appropriate to bedlam than a burgeoning economy, as Roger Hainsworth described it. As I've just suggested, given the speed and ease at which it developed, it is probably more appropriate to think of this system of private IOUs in the early colony and as an extension of practices those lower orders arriving in colonial Sydney already knew and trusted, negotiating and endorsing promissory notes hand to hand. The laws of negotiation were almost a century old by the time the first fleet made camp at Sydney Cove. There were, however, clearly problems with this system which concerned Macquarie. Issues including fraud, forgeries, the volatile value of these promissory notes, and most importantly, a lack of sound sterling money which shipmasters, foreign shipmasters, would accept to pay for imports. Macquarie's solution, of course, was to establish a bank, chartering a private company, the Bank of New South Wales, in 1817, the founding company of what today is known as Westpac. The idea was that creating a deposit taking and note issuing bank backed by a large shareholder capital, would provide the colony with a far more stable and reliable currency. It's important to notice that these notes themselves weren't money in any final sense, and certainly they weren't legal tender. But as you can see written on the note, they were promises to pay sterling. Banknotes, like deposits, were a bank's liability that had to be paid out if presented. But the idea was notes, the note issue of a bank with large reserves would serve as a final means of settlement for most transactions. The trade-off was that the bank decided who got this liquidity and on what terms. Following Macquarie, banking really took off with the arrival of what was known as the Anglo banks. These banks were headquartered in London, where their creditors resided, so to be close to the hugely liquid London money markets. They were created, however, specifically for operation in the Australian colonies. The first and most significant of these banks was the Bank of Australasia, founded in 1834 and beginning operations in 1837, and the Union Bank of Australia, which was founded in 1835 and began its operations in 1838. The Australasia and the Union would later merge in the middle of the 20th century to form what we now know as ANZ. Now, there are three important elements to stress about the appearance of these Anglo banks, which I don't think tend to receive enough attention. The first is the distinctive and highly novel corporate structure they took, or corporate form they took. Banks historically had been small partnerships or family institutions, and unless they had a royal charter, could not have more than 6 partners. This changed with the English Joint Stock Act of 1826, which provided banks to have a greatly enlarged capital provided by shareholders. Moreover, the big Anglo banks in Australia were granted limited liability in their charter, a new kind of legal protection for shareholders that was only made standard for all bank corporations after 1860. There's big legal developments going on here. Second, then, these banks suddenly had enormous firepower with which to create a potentially unlimited supply of credit money. Then, as today, these banks worked not by intermediating between savers and borrowers or loaning out state money at a fractional reserve, but created brand new money through its balance sheet operations, where both an asset and a liability was created when loans were made. The loan was the bank's asset. The corresponding deposits or notes it issued were its liability. It was the bank's job to maintain cash reserves to pay for the notes or deposits as they were drawn and profiting as the loan was repaid. So there's this potentially limitless supply of credit money now being created, which has served as both the source of dynamism, but also fragility in Australian capitalism and indeed world capitalism. The third aspect to emphasise, I think, is the emerging relationship between banks and governments. Macquarie's initial plan for the Bank of New South Wales and then the chartering of the Bank of Australasia and the Union Bank, a major public problem, that is the need for liquid currency, was being given a private commercial solution. There were, of course, options for the colonial government to issue its own paper currency. Joseph Banks had made that suggestion as early as 1805, and such appeals were made throughout the 19th century. But as the case was right throughout Victorian Britain, whether building railways, canals, roads or telegraphs, the British state contracted out public goods to be delivered by private companies. And this has had clearly a lasting legacy. We only need to look at the architecture of the bank's new buildings to see how they model themselves as quasi-public institutions. As seen in these 1859 photographs from Sydney, they replicated the neoclassical designs being applied at post offices, galleries, and indeed Parliament houses with the Corinthian columns and grand facades. Likewise, on the iconography of their notes, we can see there of various Anglo banks and colonial banks, images of Queen Victoria, Britannia, and royal crests adorning the notes. As with Stephen Coxon issuing his own private notes, so the banks sought to exude public confidence in their private credit. Now, the arrival of the banks did not mean the disappearance of private IOUs. In fact, quite the opposite. This was due to 2 reasons. The first reason is that the business of 19th century banking was not about making long-term mortgage loans as it is today, but short-term discounting of bills of exchange. Bills of exchange were a centuries-old form of trade credit, which merchants typically gave manufacturers or farmers when making a purchase that could not afford for until they had sold the goods that they had procured. These bills represented a promise to pay at a future date, say 30 or 90 days. If the holder of the bill, the manufacturer or the farmer, could not wait for payment, which was often the case as they had their own commitments to meet, they might endorse the bill by signing the back of it and use it to settle their own debts. Banks made a business out of discounting bills, which meant buying the bills for less the face value, the difference amounting to a rate of interest to be earned over the term of the bill's maturity. As a payment for the bill, banks would offer either their notes or a deposit account. This was how new money, new liquidity, was pumped into the economy. The system was immediately appealing for bill holders because for their own payment purposes, because bank deposits and notes were universally better known and trusted than the bill of exchanges of merchants. So bills of exchange, a medieval form of private IOU, continued to drive the payment system. The second reason private monies continue to circulate, and this now gets us back into the world of Stephen Coxon, is that banks in Australia, at least until the 1860s, almost exclusively dealt with merchants and not with sheep farmers or producers. There were multiple reasons for this. Publicly, the banks said that merchants themselves were better placed to assess and advance credit to pastoralists. Pastoralists also had few tangible assets to use as collateral. Many were squatters on expropriated Indigenous lands and even ran sheep on merchant. But there was also something more nefarious going on here. Many of the directors of the big Anglo banks were also leading London merchants importing Australian wool into Britain, and they used their privileged position on the bank's board to extend themselves generous lines of credit. It worked something like this. There's a bill exchange here from 1837. A London merchant, who might also be a bank director or a friend of the bank director, as is the case here, would have a consigning agent in the colony, and the agent would be empowered to draw bills of exchange on the merchant or the merchant's bank. The bills would be written out to the pastoralists needing funds for the forthcoming season, with the pastoralist providing a bill of lading that gave the colonial agent and London merchant the right to the wool once it had been grown. The pastoralist could then take the bill to a Sydney branch of an Anglo bank and have it discounted for a bank deposit, which they could then draw on to buy supplies and pay workers. The merchant cum bank director back in London would ensure his bank branch in the colony would accept the bills issued by his agent. The bank would then remit the bill to London for payment by the merchant. So in this case, we have the agent Prosper Demester drawing on his principals Donaldson and Boyd in London down here, crediting the pastoralist Richard Jones, which is filled out here. We can see how the writing on the back, just through the other side of the bill there, implies that Jones had accepted and discounted at a bank, therefore giving him his funds that he needed. Now, while the sheep farmer got his funding, the advantages were all in the merchant in the bank's direction. This method of financing was usually contingent on the pastoralist agreeing to multi-year deals with the merchant, while the pastoralist did not have access himself to liquid bank credit, but was relying on the merchant and had to find other means to fill any payment gaps. So if we just zoom out just for a moment, what we see through the 1830s and 40s, I think, is colonial Australia being integrated into an empire-wide multi-tier funding and payment system. Now, this is a rather stylized image of that system, but it gives a sense of the emergence of the interlocking institutions in which more and more facets of society and the economy were implicated. Anchoring the system at the top there was an institution we haven't mentioned, the Bank of England, which held most of the gold reserves and whose notes were as good as gold. The London money market kept reserves with the Bank of England and issued funding to the joint stock bank below them, including the Anglos, on these accounts. The banks in turn maintained their reserves through these bill brokers in the money markets and issued their own promises to pay, the banknotes and bank deposits, to merchants and everyone else. Then, on the colonial frontier, merchants held accounts with the banks and issued their own promises to pay to pastoralists in the forms of bills of exchange. From these funds, the pastoralists issued promises to pay on their labourers, who at the very bottom of the hierarchy there just hoped that everyone else could keep their promises. So to return to Schumpeter's point early on that I mentioned, what served as credit and what could be used as a means of payment to settle a debt, what served as money, depended on where one sat in this institution hierarchy. But it's down the very bottom where I want to now turn back into the weeds of the frontier, as I call it. So while it's been largely forgotten by historians, Stephen Coxon's world of frontier private monies was made abundantly clear to newly arriving settlers. Immigrants leaving Britain from the 1830s onwards were typically advised to deposit their savings with an Anglo bank before leaving, who would then provide them with a bill that they could draw at the Sydney branch when they arrived. Then, when heading up country, the new settler could draw on open cheques to pay for things as they went on this account. The most remarkable aspect of the use of these notes in the country is that most did not make their way back to the bank for settlement for a very, very long time. Rather, a traveller would issue them to pay for lodgings or goods somewhere, and inevitably this would be endorsed by the recipient, that is, signed on the back, who in turn would use it for their own payments. We've got a couple of examples of what this looked like. These bills haven't been endorsed very much, they perhaps weren't in circulation that long. The one on the left, interesting enough, was issued to Sam Lyons, the brother of Saul Lyons, who we met at the start, who was pursuing Coxon for his debts. On the back, the bottom left of the note there, Lyons himself endorsed the note for another kind of payment. Now, it was not uncommon for notes to be presented 6 months after it had been issued. Some commentators even reported notes circulating for 18 months before it came back to the bank, by then tattered and covered in endorsements. It also was uncommon to be paid change for a transaction in another cheque or promissory note. So these things were darting all over the place. There were, of course, problems with this system, as you can imagine. For one, there was also every chance in a region that the signature on a note was not known, that it would only be taken at a discount of the face value to avoid risk of it being forgery or not being honoured. It also provided plenty of opportunity for swindlers and frauds if the swindler could hoodwink the victim into thinking they were credible. As Kirsten Mackenzie's work has entertainingly shown, tricksters went to great lengths appropriating aristocratic names and lavish clothing to have their dodgy notes accepted by unsuspecting purchasers. As a consequence of this, popular culture in 19th century colonial Australia was awash with satires of paper money as a fictitious wealth, a trope going back to the 18th century. But the system expanded nonetheless. Now, in addition to these general private circulating cheques and notes, there are also a few special cases that distinguish the internal economy of the colony and help shape the geography of colonisation. First and perhaps most notoriously was the so-called order system, the notes issued by pastoralists on stations to pay their labourers. What this involved was a pastoralist paying with cheques drawn on by a station overseer on their consigning agent or bank. Usually these were paid after 12 months of work, which was a strategy to keep labourers employed for long periods, especially in the gold rushes when everyone was absconding to get rich quick. These orders could take various forms. Some were merely handwritten notes, examples of which we have here. Often they simply looked like open cheques and again could be endorsed on the back of payments. But increasingly, they took the form of more elaborate notes, which pastoralists would have printed up and try and help avoid forgeries. We have a couple of examples here from the Dixon collection here. On the left there, a note for £1 issued by Henry Bate Fitz, who had a station up at Pikedale on the Darling Downs, and he made his note there payable to his agent in Sydney. On the left, we have a note from way out west at Menindee Station, a £5 note, most likely issued by an overseer to pay labourers, as it was payable at the Melbourne office of the Menindee proprietor, George Urquhart. So that note was a long way from home. Again, we see a struggle for liquidity playing out here. Paying in orders meant the pastoralists did not have to pay ready cash and could delay payment for labour. These orders were described by colonial bankers, merchants, and even the governor, George Gipps, as literally the circulating money of the bush. Like other promissory notes, they would pass from hand to hand, again often at a discount the further they travelled from their point of origin. And again, this system was beset by problems. During the colony's first major depression in the early 1840s, there was plenty of evidence of labourers' apprehension going up to work at the bush due to the reputation of the order system and the frauds it entailed. There are stories of men working for an entire year, travelling 300 miles back to Sydney to present the order for payment, only to have it dishonoured because the pastors had no funds and therefore lose an entire year's wages. Devastating stuff. There were reports that IUs would be issued in tissue paper or very stiff paper, both of which would disintegrate well before it reached its point of destination payment. In this situation, liquidity problems hit those with little negotiable power. In 1843, at the height of the Depression, there were reports of families selling every article of furniture and clothing they had in an attempt to get some line of credit with their local storekeepers. Again, a lack of liquidity kills you quick. Now, magistrates defended pastoralists, saying these notes were never issued, they never issued bad orders to avoid payment altogether, but this was telling to quote, in bad times, they were knowingly given to stave off the payment of cash for as long as possible. How long can we roll over this debt? Again, it was the labourer that copped the brunt of the system. Now, workers did have some protection under the master and servant legislation, which was the industrial law of the time. Initially, they were required to bring the matter before the magistrate in the district they worked, which might mean making a long return journey for another 2 or 4 weeks back up the country. You could be out of work for 8 weeks just to try and settle your payment. That law was changed around 1845 and cases could be taken where the master resided, which was often in Sydney, not at the station. However, the more important calls to legislate that orders be paid in sterling, not in orders, were never realised. Fraudsters and crooks also used the system to their advantage. The elaborate designs of pastoralist notes opened up opportunities for fraud as much as it reduced those opportunities. There were plenty of examples of newspaper articles, advertisements warning off what they called scam bank notes. That looked like reputable bank or pastoralist notes, but were in fact nothing of the sort. William Dixon himself perhaps unknowingly collected one here. The notice on the left warns precisely of the note on the right. There were also issues of worker surveillance. As one big sheep owner living in Sydney admitted to a select committee in the 1840s, he was able to tell what his labourers spent their money on when publicans finally cashed in the orders in Sydney. So as this final point suggests, only a small fraction of labourers seem to have actually attempted to cash their orders for sterling payments at the bank they could be paid at. Most, in fact, were used as payments up the country, and many found their way to store and innkeepers that were at the vanguard of the push into the interior. Store and innkeepers therefore acted as dealers in orders and credit. They would accept the orders as payment for goods and often grog from itinerant workers. The storekeeper had considerable leverage here. They charged at prices much higher than in Sydney, and the further an order travelled from the sheep station it was issued, the less liquid it would become. As storekeepers would only accept at a discount of the face value to accommodate not knowing the issuer. Of course, if you were holding the note, you would never know how much of a discount the shopkeeper wanted to apply, so you really didn't know the value of the note carrying. If the order was valued more than the purchase that was being made, storekeepers would often issue their own notes in change, which were only payable at their own store, thereby locking the holder into spending the balance at the inn. The notes might also be used if the worker wanted to discount the whole paycheck with cash. The storekeeper there acting as a sort of note issuing bank. Not only were pastoralists issuing notes, so were storekeepers, innkeepers, and hoteliers. We have a number of examples, again, from the Dixon collection. A very early example there from the so-called Star and Garter Inn at Burra Creek near Lake George in the 1830s. Dunsford and Co., the note below it, they were a Geelong firm with a store on the Bunnings Goldfields near Ballarat in the 1850s. And the note in the top right there, the Settlers Depot note at Scone, was issued by a storekeeper named Asser and Sons, which, judging by the 1900s photo on the right there, suggests the style and perhaps the notes as well were still well in circulation half a century later. So a long life for these things. Store and innkeepers also bore incredible risks as much as they could leverage their opportunities. They were typically expected to issue extensive lines of book credit, and accepting orders, there was always the potential they were accepting worthless pieces of paper or forgeries. But as was common advice to anyone wanting to establish themselves as a store or innkeeper, Those that refused orders till they knew the names of all the various stores in a region would in fact never make a single sale. It was a risk you had to take. So this pattern of payments of orders issued by pastoralists and notes by storekeepers replicated itself as Europeans drove further and further into the continent. By the time that this kind of system was considered a bit primitive in the settled districts around Sydney in the 1860s, it had in fact become widespread further north up towards Toowoomba and the Darling Downs. Again, as you can see here from the Dixon collection, Dixon holds examples from even later in the 19th century, moving us into further remote districts. Junda in outback Queensland on the top right there, the Albert River in the Gulf of Carpentaria, and as far west as Halls Creek up in the Kimberley in 1896. These webs of credit began providing the basic infrastructure of colonisation. The note in the top left there, issued by the pastoralist Stephen Spencer at Mount Abundance near Roma in Queensland. This is probably my favourite note, as simple as it is, because the typeset really gets us back to what we're dealing with in all these examples. They are literally IOUs, which is quite incredible. Now, there was very much mixed opinions about this whole system of order and store notes, and it occupied considerable newspaper columns. Some saw it as a necessary and convenient element of frontier life, given it was not possible or safe to hold bank notes or at stations. However, they also argued that better legal protections, such as a public register of all those issuing notes, were needed to protect those who received orders as wages and others who accepted them as forms of payment. An 1850 Select Committee recommended that individuals and stores issuing notes should fall under the same regulation as banks and be obliged to make periodical returns on the amount of notes they had in circulation. This never happened, and we really have no way of knowing the quantity of these promissory notes that were circulating in the colony. However, many others also saw the entire system as a nuisance, and on this view, they considered the spread of branch banking, which we'll get to a little bit later, and the shift from an order system to a banknote and deposit system as part of the stable development of civilisation in colonial Australia. Debates about the order system were also bound up with class politics. It was used by radicals to attack the pastoralist Bunyip aristocracy who claimed pretensions to wealth, but they were lampooned by radicals as holding nothing but worthless paper. The radical press also bemoaned that legislators would not fix this system, implementing the kind of register I mentioned before, because legislators themselves, as large sheep farmers, were some of the worst perpetrators of fraud. Now, it was not just pastoralists and storekeepers issuing their own notes. Outside Australia, the most famous example of private issued money are probably the notes issued in coal towns by coal companies to pay their workers in early 20th century America. But colonial Australia also had its example of mining company scrip dating from the 1840s. The best known example was probably the Burra mines in South Australia, where, despite sitting on one of the richest copper depositories on the continent, were plagued by constant liquidity issues, given the immense capital taken to get the ore out of the ground and lead times in having it shipped to appropriate markets. Like the pastoralists along the East Coast, the mining companies turned to a system of money orders, issuing their own notes as a means of defraying their current liquidity problems and locking workers into long-term agreements. There are other examples in the Dixon and White Mitchell library collections too, of a large range of bigger employers leveraging their own private money. We have the Fitzroy Ironworks at Mittagong, the Hindmarsh Brewery in South Australia as classic examples. And the examples at the bottom there, the wages of sailors and shipmen, they were their own special case, but they nevertheless followed a similar kind of logic of being paid in bills and orders. Okay, so we've covered quite some territory, and in my last few minutes, I want to return to some of those bigger themes that I mentioned at the outset. The first issue revolves around what perspective the history of the colonial payment system might throw on the geographical dimensions of colonisation. State money is often treated as an instrument of territorial control. The further a state's money can circulate, the more control it has over a given area, generally through its taxing power. But there was no state money in Australia until 1910, when the Australian pound replaced banks issuing their own notes. In colonial Australia, what emerged was not a unified monetary territory, but hundreds of tiny monetary zones that centred around pastoral stations, stores, inns, and hotels. To try and begin to illustrate this, I've used the State Records Office database of liquor licences to map out the spread of inns and hotels in New South Wales. Now, this image is partly what we'd expect, and between 1838 and 1860, we can see the licensed hotels and inns track stock and travel routes moving further into the interior. This gives us a visual sense of the spread of colonisation, but also, given everything I've discussed so far, it also gives us a visual representation of the webs of credit that facilitated the rather rapid geographical spread of Europeans into the colony, into the continent. Focusing on stores helps to fold other actors back into money history that are perhaps usually overlooked, I think, as well. The first, of course, is the decisive role women played in the colonial economy. Women owning and operating frontier inns has been remarked upon since the first generation of Australian feminist histories in the 1970s. Leslie Deacon calculated that 13 of the 244 country inns in colonial Australia in 1838 were run by women. By my count, women ran 70 of the 2,000 odd licensed premises across New South Wales in 1860, including about 36 in the country regions. Now, the focus on this scholarship of women owning inns has typically been on the economic opportunities inns afforded women. But I think we can also think of these women then as money dealers and the possible privileges, but also risks that afforded them in the hierarchy of liquidity and credit that I've been talking about. The other migrant group we need to consider in talking about stores and inns in this front are, of course, the Chinese, who we know ran many of the stores in regional and urban colonial Australia before the 19th century. And I think it'll be interesting to see how the new histories of Chinese Australians that are currently emerging might connect with this history of the payment system that I've been detailing, outlining here. Now, the most significant questions raised by these kinds of maps that I've plotted are, of course, those of First Nations peoples in this story. We know full well that colonising Europeans hide Indigenous peoples on a regular, if uneven basis in southeastern Australia in the middle part of the 19th century, and that they were paid, but we know less about what they were paid. As the transportation of convicts came to an end in the 1830s, there were a series of inquiries through the 1840s into the possibility of employing First Nation peoples as workers. Two things are striking about these reports. First, there's only mixed evidence as to whether those employed by settlers were paid in the same way as other labourers. Much of the evidence suggests pastoralists paid Indigenous peoples in coins only. Either way, this poses significant questions about the attitudes of both Europeans and First Nation people towards metal and paper money, and the kinds of relationships it did or did not foster between them. Second, and perhaps more striking in these 1840s inquiries, were the settlers' perceptions of Indigenous uses of money, emphasised settlers' perceptions. Invariably, this turned on questions of Indigenous capacity or incapacity for civilised settled habits, and the reports inevitably finding the latter, and thus feeding into that devastating dying Aborigine myth of the latter 19th century. As Brian Getler has written in the Canadian context, there is an eerie historical echo into all this in the relationship between money and colonialism, in the way in which contemporary governments in both Canada and Australia have sought to police and discipline the uses of money by Indigenous people, especially in remote communities. In Australia, as it was in the 19th century, so it is in the 21st, it's been shrouded in the language of intervention and lifestyle choices, but it speaks, I think, to continuing settler anxieties about civilising the North. Of course, the institution that most thoroughly, if not completely, conducted the monetary conquest of Eastern Australia were the banks. After the 1850s, which of course marked the onset of the gold rushes, banking in Australia developed a distinctive and highly competitive practice of branch banking. This partly reflected intense competition amongst the banks for deposits to enlarge their balance sheets, but also changing lending practices as banks became more willing to lend to farmers on collateral of sheep and land. Again, we can provide a visual sense of this, and I've used the manuscript left by Sid Butland, the great Sid Butland, in the State Library, listing all the bank branches open in Australia until 1914 to begin to illustrate this process. And thanks to my brother Sam for assisting in the animation. We've only mapped here three of the biggest banks: the Australasia, the Bank of New South Wales, and the Commercial Bank of Sydney. But it nevertheless gives a clear sense of the patterns and speed of branch expansion. Again, like stores and inns, these were often preceded rather than followed the establishment of towns. By 1914, there were over 2,000 branches open in Australia, operated by 21 banks. The 3 banks that I'm mapping here for you now accounted for well over a quarter of all those branches. Now, there are a couple of key points to leave you which arise from this map and this plotting, I think, which returns me to my original questions about the politics of money in Australia, which I can only treat as questions here. The first is that the triumph of the banks was not uncontested, even if it eventually proved inevitable. For a time, storekeepers did provide a viable alternative to branch banking, and there are cases in Queensland where banks only moved in once it was clear the stores were no longer issuing their own notes. Perhaps more significantly, there remain questions as to whether the power of creating liquidity should be placed in the hands of private commercial interests. While there were plenty who argued that the order system of paying labourers needed to be replaced by a more secure banking system, others campaigned that money was too important to be left in the hands of private interests. One of the surprising finds of this research project, and a different paper I might have given you today, has been a wealth of pamphlet material from across the 19th century that debated commercial banking in these terms. The establishment of the Commonwealth Bank of Australia in 1911 by the first federal Labor government was one outcome of this protracted debate, and it probably reached its high point, of course, and probably its end point as well, with Ben Huf's unsuccessful pitch to nationalise banking in 1947. What I'm suggesting is that we might consider debates about the proper role of banks in society as a once perennial question of Europeans in Australia. And just as an aside, this debate wasn't nearly revived in the recent Payne Royal Commission, but it might well yet be revived in an age of low interest rates and high housing prices. We'll see. Now, it's also important not to ignore the very slow death of frontier promissory notes and orders. We've seen some of the notes that date from the very late 19th century, but even into the second half of the 20th century, storekeepers and pubs would accept cheques, and banks occasionally received promissory notes. That said, the very existence of the collection that I've been studying suggests the triumph of the banks occurred well before this. By the time that William Dixon thought it interesting enough to begin sourcing this collection, sometime in the very early 20th century, private monies had become arcane enough to become collector's items. And soon too, they would become interesting to historians. And that, I think, is a natural place to leave things. Thank you for listening.
Thanks so much, Ben. So much really great information there, and really lovely to see so many different examples. We've got lots of comments coming through on the chat about how beautiful and how basic some of those notes are. I quite liked the 1814 note that looked almost like a train ticket. It was really very modest. I think people are perhaps looking at their $5 notes and comparing them unfairly to some of the things that we had. We actually do have a very specific question about a particular note, the Anne Marsh 1812 currency note.
Yes.
And do you know if that is actually the earliest extant note that there is, at least in our collection?
I'm not sure. I'll take it. I'll take it on notice. I do know the Anne Marsh one well, but not in those terms. But there are notes that date back to 1803. There was a Robert Campbell one, which to me looked like the earliest one. That
it wasn't necessarily in. Some of them are in quite poor condition, aren't they? I mean, it's quite surprising that they've actually survived
this long, and how they do survive. One thing I didn't note was most of these don't survive because they tended to be destroyed once they were used as a final means of settlement to avoid the forgeries. So a lot of the ones that we do have are in fact forgeries that were perhaps kept for court records, court cases or things like that. So it's surprising the ones that we do have. There's a lot of forged banknotes in the Dixon collection. Perhaps because they served as a piece of evidence in court cases.
That's super interesting. I won't tell anyone in our finance team.
They're written there. You know, it's in the record.
It's in the record. Someone is actually asking for a bit more information about forgery, and if you are stuck with a bad note, who pays the price of that? Is it the last person holding it, or are they able to then trace it back, or, as you've pointed out just then, actually go to court and try and pursue the money.
Yeah, the laws of, I guess, negotiation had anyone that had endorsed the note were liable to pay it. Anyone could be drawn on, everyone could be brought to court to try and recover the funds. But if it was a forgery, I guess there are a lot of cases of this. It probably went back to the person that issued it. That they had to pay something. But many times it just kind of left, with your pants down, so to speak. There was no way of recovery. One of the issues with the order system that we're talking about, where pastoralists paid their labourers, and the labourer would walk 3-4 weeks to redeem it in Sydney, and once they found out, the pastoralists had swindled them, there was no funds available. This was one of the big issues. What do you do? And one of the suggestions was that there should be a government register or agency that you could take it to, and they could kind of follow it up. As it was left in the labourers' hands to travel all the way back up country, find a magistrate and try and prosecute. But most of these people didn't have the means, and so there were people exploiting this left, right and centre. You could kind of see how it worked. The assumption was often that you probably would get away with it, but of course many were prosecuted for forgery, and it was the forger who was always the one they wanted to get.
Yeah, they were often in trouble. Somebody's asking you to speculate a little bit.
Yes.
What do you think historians will say about cryptocurrency in 100 years' time?
I thought this.
Why?
Yes, I was wondering if this might come up. I'm not sure, and I don't at all pretend to be an expert, but perhaps going back to my Joseph Schumpeter point, don't start with coin. And it's interesting that Bitcoiners and crypto people want to get back to the coin, but as I said at the start, if we want to understand money, we've got to look at the credit and payment relations. So I'm not sure, but historians might say that this was just a bit of a passing fad, who knows, or a stepping stone to some kind of new credit technology. But whether the coin itself is something that lasts is of interest, I'm not sure. But I'd probably take Schumpeter's advice and not start with coin, and step back and see what else, what kind of credit system evolves out of it, I think would be my answer.
Somebody is asking a question about coins.
Yes.
They're asking about the role of the Spanish coin in the colonies, particularly when there were shortages of money, and were there notes at that same time, or was it really at that point the emphasis was on the coin?
Yes, that's right. In the very early colony, there was a kind of a huge mixture of different coins, whatever they could get their hands on, to use as one means of settlement. But there was a short period, which the questioner might be referring to, in the early 1820s, when the Spanish dollar, as it was called, actually became the final means of payment. They kind of moved away from the British sterling pound because they just couldn't get enough of it. And so there are a lot of examples of notes that are payable not in sterling but in Spanish dollars. The Spanish dollar was exchangeable at a rate to the pound, the sterling pound. I think it might have been I can't remember, 4 shillings worth of Spanish dollars bought you £1, I think. But you do, so that there was kind of very complex exchange operations that had to go on. But there is, for a short period, a real wealth of notes that were issued and payable in Spanish coin. So that was certainly a thing, and it probably lasted on, into the 1830s. Some of these things kept circulating, especially those that were away from the main city centres.
Interesting question now about class and notes, and your comments around a loss of faith in one's notes or a loss of liquidity was a negative mark on a person's honour. But was the inverse true? So did the pastoralists see issuing their own paper notes as a bit of a status symbol? Was it something that they may have invested in just so that they could have them?
That's a really good question. And I think if we look at some of those elaborate pastoralist notes, that perhaps might convey as much. One aspect that I would like to get into more with this is that there was obviously a whole business around engraving notes. Someone sitting back in Sydney or Melbourne or Brisbane, spending a lot of time kind of engraving these things and producing them, or they have clients, customers that are asking, can you produce me, a run of 1,000 notes, some kind of pastoralist from the country, and can you make it look as regal as possible? So I hadn't thought of it in those terms, that reverse, but that's a really good point. And again, we could use the evidence of the note, I think, to suggest perhaps that was the case. So maybe we need to give, it's as I said, there's a sense that these pastoralists like to think themselves as the new aristocracy and issuing their own money. I guess they thought of themselves as sovereigns in a way, so issuing a sovereign currency. So I'll, I guess, take that on notice in a way, but that's certainly a line worth inquiring into.
So many questions. People are sort of saying how interested they really are. You've sparked the imagination of a few early career researchers who are going to go off and do more on early capitalism.
Oh, they must, yeah. You have to pay your bills, everyone's implicated.
Well, someone's asking about mortgages of the 1800s, and they work in the same way as they do today, or pastoral leases mortgaged for say £10,000 or something.
They did. And as I said, banks at least early on to about the 1860s, my understanding is they didn't tend to engage in mortgage lending. It was kind of seen as bad practice. And commercial paper was much more secure, but there were, Butlin, who we always have to follow here, he details quite a lot of different practitioners. There were specialised mortgage companies that were appearing. Insurance companies might lend you mortgages. There were even, kind of individual solicitors who had a bit of money behind them who might engage in more long-term mortgage lending. So it certainly existed. The other thing that I didn't mention, of course, was the mortgaging of the sheep, the wool on the sheep's back, which is the famous line, the 1843 legislation, the line on Wool's Bill or Act, which made it legal for you to mortgage the wool over a long period, the wool still growing in your sheep's back. And that change in legislation is really what got the banks more interested in perhaps lending more directly to the sheep farmers a bit later on. So again, there's a kind of legal infrastructure beneath all this that we have to pay attention to as well. I didn't really have time to get into that today, but that's a major component of this research. So the law of bills versus the laws of mortgages is an interesting one to look at.
And I'm going to try and squash in one more question because it's a neat contrast to that idea of lending. It's asking if you've done any work around the court of requests as a means of retrieving debt.
Yeah, I haven't looked, again, because the past couple of years I've been to do much at all, but that's a really important institution that was established in the early 1820s and existed for about 25 years as a mean to settle small debts of about £10 or under, I think. And I did have a bit of a look at it. It's a really fascinating institution. They kind of rammed through a couple hundred cases every couple of days. It was generally just individuals presenting their cases, calling on whoever who had, owed them money. Lawyers don't tend to be involved. It was a very kind of informal setting. So in a way, the story is really about kind of ancient to modern, that transition, and the court of requests sits at an interesting kind of juxtaposition there, or an interesting hinge. So yeah, really important institution. The other law that's really important here is the abolition of debtor's prison, which happens in the 1840s. Talking about your ability to pay your bills, the fact that you didn't have to go to prison if you couldn't pay them was a massive kind of transformation here as well. So another legal element we didn't quite get to.
I'll have to bring you back to the library when
you will. No, I can.
Thanks so much, Ben. That was just fantastic, and a special shout out to Sam for what was a really fabulous illustration there, showing all those branches breeding across across the East Coast. So thank you to you. Thank you everyone for coming, not just today, but for your company all year. The greatest privilege of my job is that I get to hang out with really smart people doing really interesting things. But of course, I don't look after the fellows on my own. So thanks to Richard Neville, who's the Mitchell librarian who oversees the fellowship program here at the library. And of course, bringing these great talks to you throughout the year on Zoom would not have been possible without my very tech-savvy colleagues, Rebecca Lawrence, Emily Mirish, and Jade McLaughlin. And I'd also like to say thanks very much to all of my colleagues across the library who share their time, knowledge and enthusiasm to help our fellows. So stay safe and we'll see you all again next year. Thanks so much.
Thanks, Rachel.